Welcome again, everyone, to today's webinar, The Year in Sustainability. I'm Alyssa Rade. I'm the Chief Sustainability Officer at Sustain.Life, and I am joined today by two incredible panelists, Dr. Chris Wedding and Talia Raffaelli. I'll give them both brief intros before they introduce themselves and give us, I'm sure, a lot more interesting details than I'll be able to convey. But Dr. Chris Wedding is founder for Entrepreneurs for Impact, which is an executive peer group community for growth stage CEOs and investors tackling climate change. He is also a professor at Duke University and UNC Chapel Hill, a former environmental private equity investor and impact investment banker. He is a 4 times founder, executive coach, and occasionally a monk. So we hope to hear more about that, Chris. And Talia Raffaelli is a general partner with Compass VC, which is an early stage venture capital fund focused on digital transformation and decarbonization technologies in the built environment, manufacturing industries. She has over 12 years experience as an investor in various venture capital capacities, and most recently has overseen investments and innovation for automotive manufacturers Porsche AG, prior which she was technology and M&A banker in New York. So thank you so much both for joining us. Before we kick it off, I've given the high-level overview. I've given the public bios of who you guys are. But please, let's start with Chris, but introduce yourself. Tell the group, why are you here today? And, some interesting perspective and expertise that you hope to share with them over the course of the dialogue.
Well, you asked about the occasion of monks. So I have to make the requisite joke first, which is it's not hair related, right? Plenty of long hair here belies those practices. Well, I think one comment I hope to make, or maybe I'll just make it now, but one theme here is, look, we're looking at this year in sustainability, but what about next year? What's coming? And one item I wrote down was we'll see lots more folks switching careers, right, from non-climate, quote unquote, into some climate solution orientation. And that's super exciting for those, of course, switching and us receiving all that great talent. And that was in some ways my path as well. Skill set perhaps wise, I was environmental science kind of focused, rainforest research 25 years ago, somehow switching into private equity banking and really the power of finance in private markets to build exciting companies that solve hard problems, which I think all of us on this call relate to. I'll keep it short. I'll pass it over to you, Talia.
Sure. So Talia Raffaelli, as Alyssa said, I've been working in investments in startups for kind of the last dozen years, really seeing a very, very interesting shift of attention and interest and passion of entrepreneurs. Given that we are a global fund and we're kind of located in different geographies, it's so interesting for me to see kind of how different the narrative is from one geography to the next. We're actually based in Denmark, and the narrative, in the Nordics is really about everything sustainability. That's really kind of, there's no other option, really. Every entrepreneur you speak with throughout Europe is kind of talking about, renewable energy, and especially, with the geopolitical situation right now. And if you go to other areas in the Middle East and the US, the narrative is a little different. And what I think that we'll see is that's going to trickle kind of from one geography to the next. We're going to see so many more kind of incentives and regulations coming in. That's going to be kind of a major area of focus for many people who, let's say, a year or 2 years ago, weren't even thinking in this direction, right? I'm talking to so many people on a daily basis that are interested in finding their path in sustainability. How do they how do they leverage kind of their skills and what they've done in the past and find new areas of interest? And it's just incredible to see. So I'm extremely bullish, very optimistic on what, at least from a financial perspective, what we're going to see over the next several years, with a lot of shifts of people kind of changing their ways and looking for new directions in this area.
Awesome. Well, thank you both again so much for joining us. I have to say, I wholeheartedly agree. I think that 2022 has been this incredible, it's like a little bit of an inflection point. I just think that there's been this incredible synergy and marriage of market forces and regulatory forces really powering innovation in the climate tech space, in the sustainability space. We're going to talk a little bit about what that means and all the different parts that comprise it. But I just think it's really been this perfect kind of opportunity. And I think what both of those market forces and the regulatory forces have come together to do is really fight greenwashing and kind of really like codify and solidify what is sustainability, what is, progress? What are the things that should be anchoring us in a real way to our goals and our, stated progress towards them? And, when I think about some of the pressure and like looking back to 2022, some of the highlights that I think about really embody, like I'm just thinking of the news and the headlines, but like some of the things that we've seen in 2022, the year kicked off like back in February with Morningstar reclassifying a bunch of its ESG funds. And I think we've seen throughout the year this narrative of companies and funds reevaluating themselves, being reevaluated by regulators, but basically saying, hey, is what you're doing really sustainable? Because you can't just throw that word around. This is not a marketing employee. This is not willy-nilly. This is really starting to be anchored in specific criteria because, much driven by the investment community, this is a real thing. Like this has real details behind it. And so just thinking about those headlines, I thought of Morningstar reclassifying, I think, 1,200 different funds on its rating base. I'm thinking of Tesla, which was kicked out of the S&P 500 ESG index, which was kind of a huge hullabaloo. How could you take, a company that has major goals of transitioning energy, frankly, to a decarbonized electrification motor vehicle industry? And I think that really showed what is broadly ESG and what is it not, which we often, confuse with kind of just environmental sustainability and thinking of those other pillars. I'm thinking of Amundi, which reclassified $45 billion in its funds from Article 9 to Article 8, getting into some European regulation. And so, just thinking about those headlines, I think we've seen this real narrative of regulation encouraging innovation, which to me is not how you usually think about regulation. And it kind of really stuck with me. So, I want to talk to you guys. What do you see? And Talia, you have this great exposure to the European market. What are we seeing, especially in Europe, as kind of a predecessor and a leader here? And then, compared to what we see in the US?
Well, I kind of compare it to kind of, buying a shiny red car that looks so good. And like everybody's saying, well, this is like the most sexy car. And then kind of you open the hood and then you start looking underneath and seeing kind of what really is, the infrastructure of the vehicle, and then realizing that it's not exactly what it claims to be. And so marketing is marketing, right? And you can greenwash as long as you don't have the data, right? You can basically claim many things. And I think what's happening now is that we're developing all of these tools because we have to get the data, right? That is basically the premise that Sustain.Life is based on, about allowing companies to understand their data and being able to kind of prove, yes, I do abide by certain ESG metrics, or I am not able to abide by certain ESG metrics. And I think that that's what's happening primarily in Europe. I mean, you have the European taxonomy that's coming into effect, all of the, the reporting directives, SFRD, CSRD, all of these directives that the companies, especially the larger companies, are going to have to abide by as early as next year when it comes to financial reporting. And it's not going to be enough to report their balance sheet and their cash flow. They're going to have to, report a hell of a lot of different metrics. I think initially it's about 32 metrics, and that's kind of growing. But, and then what I saw is in my previous role, I was, I think that it was my biggest aha moment, is actually being employed by one of these really huge manufacturers and seeing from the inside kind of the pressures that they're facing in terms of the transition that they're going to have to go through in order to meet certain requirements. Otherwise, there's so many different ramifications, anywhere from like green financing to, meeting certain standards by customers. And that's the change that we're seeing, that they are racing to be able to make sense of the information that they have. This is something that we're seeing from, their own activities, right? So you're seeing like large companies having to understand their own metrics and their own activities all the way through their entire supply chain, because they are dependent upon so many other companies and the activities of the other companies as part of like their final product, right? Because if you look at if I take a vehicle as an example, it's comprised of so many different tiers of suppliers that ultimately what you're selling to a customer is really a product made of dozens of products, right? Dozens of companies. Each one of those companies has to abide by certain regulations, right? And so that's what you're going to be seeing. So a lot of movement, a lot of stress right now on companies, 50,000 employees, above. And then it's going to start trickling down into the smaller and medium enterprises. And it'll be really, really interesting to see kind of how that unfolds over the next few years.
Yeah. And honestly, that reminds me of, Chris, what you just said in your opening, that now that you have these requirements and these, we call them regulations, but it's also like expectation, because I think it's really important to note that these regulations were really consumer driven. We're really investor driven. Like, this is not government saying like, this is, super important. This is the investment community saying like, we really need to understand these things so that we understand risks and opportunities related to how we deploy capital and different investments that we make. And that includes also, public shareholders as well, really, really requesting this information. And so just thinking about the transformation of these, the keeper of this information or this discipline used to be the sustainability, only professionals. I went to school for this. I have an education in this. I have higher education in this. And back to what you were saying, Chris, about the incredible explosion of folks that are looking to get into this field through their unique disciplines and their unique backgrounds. So now you have finance professionals, you have operational professionals, you have supply chain and logistics professionals. And across all of these things is this kind of overview of sustainability and impact and climate, and really looking to understand what are the material impacts of those things on the business and what are the impacts of those business on those criteria themselves.
Just to double click on the talent piece for a second. I know that many of us are active on LinkedIn, and occasionally we'll see a company, maybe a startup, a climate tech startup, let's say, that has to downsize. But they said, look, let's make this right by our team we have to let go. And we're saying like, hey, here's the list, right? Here's the list of people we have to let go. Here's the LinkedIn profile. Here's maybe their prior role. Or we see plenty of tech layoffs right now. It's bad, but also it could be good, right? For a lot of us on the webinar right now to bring those folks under the tent.
Yep.
I think just further on the Morningstar headline you mentioned.
Yeah.
Look, I think saying 1,200 funds is one thing, but saying it was 1 out of 5 funds and, over $1 trillion, again, mostly European focused, that's a whole different kind of level of emphasis, I think. And maybe most everyone knows on the call these acronyms, but SFDR, I think, help me out, Sustainable Finance Disclosure Regulation, perhaps, Article 8 and 9, the most important. Anyway, this sounds it sounds almost only EU focused, but not really, right? If you're a US or otherwise based entity marketing, fundraising in the EU, you still have to comply. And look, I think it's maybe a sign of things to come for here as well. I think we'll get to the SEC, I don't know, scare opportunity later in the webinar, perhaps, but foreshadowing. Yeah.
We did, I will say. So we, the focus of this webinar for everyone on the call, we really want to talk about what we're seeing for innovation and technology and the investment community in sustainability. And so there has been so much regulatory development over the course of 2022. And so we want to mention that, we want to anchor it, but you can really get lost in diving deep into these regulations. And so we actually don't want to go too deep into them. We have tons of other material on that for those that are interested. We've got a blog summary on each of them. We have tons of links that we can share, through Sustain.Life. But I think what's important to underpin here is like, we're seeing this real ambition codified in Europe. We're seeing countries codify these things into law. We are seeing movement in the US with, yes, the proposed SEC rule, which didn't quite make it over the finish line, which would have required companies climate-related risks and opportunities, as well as their emissions. We're seeing a bunch of other bills that have come out of the Biden-Harris administration, things like requiring suppliers and contractors of the federal government to disclose their greenhouse gas emissions, set science-based targets, do the things that really are going to get us to net zero, and that if you don't do, we're not meaningfully going to get there because we're not going to have the process and infrastructure to do it. I actually just this morning, or perhaps late last night, saw a headline about $3.7 billion in funding from the government, US government, for carbon removal technology. So we'll talk about that. One housekeeping thing I realized I completely glossed over for all of our viewers today. Please use the Q&A function for any questions that you have. We have a bit of an agenda, things that we really want to make sure we cover for you guys, but we will absolutely leave time at the back end to answer your questions. I know we've already received a few ahead of time that we will definitely answer for you. Anything we don't have time for, we always send out either a recording or written responses. We will make sure that all of your questions get answered one way or another. Okay, so I think we've done a pretty good job kind of setting the stage. Now I've got this really intense graphic here that kind of shows an overview of the investment landscape. And what I picked this one because frankly, it's not meant to get into every single detail here. it's just meant to show the breadth. When we say investing in sustainability or investing in climate or investing in climate tech, this is what that means. And Talia certainly, has incredible insight to share here. But, this is what the landscape kind of looks like when we think about, the investment activity that has gone in this space. And so I want to talk a little bit about any trends that we're seeing, over the past couple of years, what we've seen in 2022 and what we expect to see in 2023, knowing that we have these bills that have released funding dollars to really push the development of these technologies. And as we all know, what starts with public funding dollars then opens almost like 10x that in private funding ability, and just really kind of puts so much fuel into the engine that is, investment into this sector. So I suppose I'll start it off with a question here. What are we seeing in the market? Like, what are companies doing? I think we have things that are happening on the reduction side, like what corporations are doing. They're making a lot of corporate pledges. We mentioned science-based targets. There's a lot of activity that goes now that climate strategy is becoming a really integral part to corporate strategy. And that is actually something that I did want to talk about perhaps before we dive into this, but the alphabet soup of ESG. And Chris mentioned, like, there's all these acronyms and some may know them and some may not. And I think the good news with the alphabet soup of ESG, which we always talk about, is that it's thinning, or I don't know the right way to say this. It's thinning, or maybe like, the matzo balls are coming to the top, but there's becoming clarity in what is in this soup and what's going to really hold traction. And so we've got like this worldwide web of all these different disclosures and frameworks. And what we're seeing is all of these working groups and an incredible effort to really solidify them and unify them and make them interoperable between themselves. And so the ones that I always want to call out and mention there is we've got things like the TCFD, which Task Force on Climate-Related Financial Disclosure, which is really underpinning a lot of the international regulation that we see in this space. So this is what's requiring essentially, it's a framework, an investor-driven framework, but that's being adopted into law, again, from this investment community saying, we need to understand this information to understand the risks and opportunities that this company, that this sector has because climate change. I think, especially in the US, we sometimes can politicize or polarize climate change. And what I think is so incredible about the investments community participation here is that they're saying, like, this is not a political issue. This is a economic issue. This is a financial issue. And just like we need to understand all of the other risks, about investments and long-term value and resilience of businesses, this is clearly a material one. And to pretend otherwise is, for lack of a better word, it's somewhat ludicrous, to try to feign otherwise. So I did just want to mention that. And I did want to also mention the ISSB, just again, for our viewers on the line, and the draft disclosures that came out there around climate and sustainability. And that is essentially a combination of taking the TCFD and the sector-specific approach of SASB and their corporate disclosures, which again, provide really helpful guidance for if you're an auto vehicle maker. ESG disclosures for you are very different than if you're in food and beverage, are very different than if you're in real estate, right? There's just different material topics and criteria. And the way that you talk about your business in a way that is, the language appropriate for your business operations. And so the big deal about ISSB, they've released 2 draft disclosures, one on sustainability, one on climate. And that is meant to harmonize the international disclosure landscape of ESG information, because our economy does not have borders, right? We are a globalized economy. It all connects. And so again, just looking back at 2022, I think we've seen this incredible unification and just like clarity in the world of ESG. Okay.
Hey, Alyssa, I wonder, looking at this chart here and connecting it to the prior discussion around things like, well, we didn't say it per se, but the IRA, right? The Inflation Reduction Act.
Yeah.
Thinking about small slivers on this chart here, like carbon, right? Call that, maybe the accounting, but more like the capture, right? The carbon dioxide removal, the CDR. Small here, but I think the same source here, Climate Tech VC, shows maybe the highest quarterly growth in funding for, let's call it carbon tech.
Yep.
And then in the IRA, the juice, if you will, for carbon tech for CDR, carbon capture, the dollar per ton is more attractive, and the method for getting that incentive is also more attractive. So it's not limited to these super archaic, high friction, super bottleneck ridden tax equity or tax credit for equity structure. So I think that's one area where we'll see that grow over time, partly due to IRA, partly the explosion of probably more than 500 companies in the CDR or carbon tax space in the last 4 or 5 years. So that's one to watch, perhaps.
Absolutely. Yeah. Could not agree more. We'll post along with this webinar, which I should also mention to everybody. We are recording it. We will send you the recording afterwards, so you'll have it for all of posterity. But we can also link, we've done some interesting talks and blogs on the IRA and a deeper dive into what's going on. It's $370 billion in funding. Like, this is a lot of money in the United States. And what is so incredible about the IRA, and that I think we see reflected also in the later quarters of this graph, is that the IRA, I think, was super successful in tying green energy and a climate, I'll call it like a climate positive, but a decarbonized economy to domestic production in the United States. And I think that has always been a challenge for us. And so now you can tie economic growth, jobs, bringing manufacturing back to the US. Like, there is no question that the exodus of manufacturing from the United States to places with cheaper labor has had huge impact on our national economy, certain states more than others, certainly, that we're so dependent on that. And so I think what the Inflation Reduction Act did so beautifully was tie that back together and really incentivize, both from the manufacturers, for doing things domestically in the US, as well as for the consumers, giving incentives to buying the things that were done locally in the US. And I just think, they did that in such a beautiful way. And it's obviously early days for the Inflation Reduction Act, and to see its ultimate impact and how all that funding gets spent. But I think, I really, can you call bills or pieces of policy beautiful? Because I think I'm going
Totally.
to. I think that's how I feel about it.
But I think it's going to be a huge catalyst, right, for a lot of new innovations, people going into kind of seeing the opportunity to, create local opportunities, create local jobs, build businesses. That being kind of on the back of this whole tech kind of bubble, or whatever we're calling the current scenario. People who are losing their, software engineering jobs or their account executive jobs, that opportunity to go and really, take capture the ability to kind of create new businesses, create new jobs. And and it's going to be driven by all these incentives.
Yep.
Just like we saw, back in 2009, 2010, after the 2008 subprime crisis, so many wonderful companies were formed, right? And you see, funds, you see different establishments calling for people, say, if you have an idea right now to form a company, we want to hear about it, understanding that there's a lot of dollars, there's a lot of money that has been raised to go towards climate. And so really be interesting to see kind of how all of that comes together.
Absolutely. And now I don't want to bring us down by mentioning the R word, recession, but I have so many conversations about, what's going to happen across the economy, if we go into a recession. And I'm certainly not an economist by any stretch of the imagination, but just anecdotally, I mean, whenever I have these conversations and it's like, oh, this is dialing back, this is probably going to recede, I'm always like, do you know what industry isn't dialing back? Climate tech, right? Like, there's so many dollars and funding that has been reserved for it. And also, again, that like beautiful impetus of regulation, like creating some stability and infrastructure to be like, this is not going anywhere. We are dedicated to this. We are not at the whims of just volatile market forces. Like, it has really anchored it, I think. And whenever I have that conversation with, with ESG or with climate, it's like, this is growing. Like, do you know how many schools and universities are creating programs and education? Like, this has gone so deep. This is not going anywhere. It is truly, I mean, I'm completely biased, but truly the future, I think, of how businesses, both those specific to this space, as well as any business. I mean, you cannot find a major company today without a sustainability or ESG team. It doesn't exist. And that was not the case, certainly 10, but even 5 years ago. I really think we're just seeing, increased, bloom of that across businesses, across every sector.
Yeah, Alyssa, I will reinforce that. So part of some of the hats I wear are professor at UNC Chapel Hill and Duke. And the classes that I teach on ESG investing or climate tech startups and investors or energy finance, yeah, the enrollment is as high as it's ever been. I tell the students, you all are so lucky. I mean, 20 years ago, trying to do this kind of work mainstream,
Yeah.
while wearing a ponytail. I mean, totally different story, right?
People call you a hippie.
Yeah. Well, in business school, we refer to it as hippie capitalist, little bumper stickers we had made. Anyway, there were a few of us, not many.
I think I can only comment because I know I see kind of the different. When I started talking, I mentioned kind of the different narrative in different geographies. I think that like in some places we saw, this big shift towards clean tech. I think maybe like a decade ago, a lot of dollars were going into that direction. A lot of entrepreneurs were focusing that direction. And I think what you were missing, and it's exactly what you were just highlighting, is that the market forces were not necessarily there, and regulation definitely wasn't there. It'd be interesting to see kind of really what that huge catalyst was for all of this money heading into that direction. But there wasn't enough reception on the market side for these technologies. And so you had a lot of startups kind of, they had this hype and a lot of, companies going in that direction and a lot of funds kind of focusing. It was short-lived though, because you didn't have the government angle. You didn't have the I guess that level of, catalyze or getting companies to go into that direction and to start acquiring these technologies. And that's how I differentiate what we're seeing today. And from kind of like a pure investor perspective, you're always looking to see, okay, where are the market forces meeting the regulation and what is actually happening earlier than later. I would definitely say that there are still segments of climate tech that, are it's still hard to understand really where the money's going to come from, where the corporates are going to kind of play and, come into play. Some are easier to see than others, but I think that that's kind of the work that the investment community is doing right now to really kind of understand where the opportunities are in climate and to get people to understand that there are financial incentives and benefits to invest in climate tech startups because there are so many, incentives for corporates to start buying, right? Ultimately, you need the customer to pay, right? And that is not always so clear in even in this diagram that you have, that we have in front of us. So that's kind of where we've been focusing over the past year, just really understanding where are our opportunities and kind of when are they going to come into play in order to kind of create some kind of strategy for how to move forward.
Yeah.
So,
and Chris, what about your climate masterminds group? I mean, is there, is the entrepreneurs in that group, are they representative of what we're seeing on this graph, or are there any trends, from that group?
yeah, I think I want to make a kind of larger comment, which is I think that the more that we in whatever sustainability, climate tech focus on solutions versus problems, the more likely it is we bring more folks under this tent. I mean, that's certainly the orientation for the, 36 usually growth stage climate tech CEOs and investors in these peer groups that I run at Entrepreneurs for Impact. It's really a source for optimism, right? I think that's whether it's within our organizations or personally when we're not at work. A feeling that I have, I think a lot of us have, is are we optimistic or are we kind of beaten down by the stats on, where are we on our trajectory towards hitting the 1.5? We're not at all, of course. Seeing things happen in real time, but surrounding ourselves on this with kind of creators, innovators, just as examples, in the mastermind at Carbon America, one of our members, Scott Fraser there, this, visionary rocket scientist bringing carbon capture to the mainstream with, household in our space, household investor names. Camille Terry at Charger Help, ensuring we have greater uptime for EV chargers across the country so that, look, we reduce range anxiety. More folks feel comfortable charging publicly when they need to. Doug Wilmore at World Tree, so planting one of the world's fastest growing trees along with regenerative agriculture to store carbon, both in the soil, but also in timber products, and to do it profitably, not relying on carbon as the source of revenue. Or bringing more gender equity to climate tech and sustainability. Helen Whiteley of Climate Tech, Women in Climate Tech, they've got 2,000 members now. Lots of power, both at the corporate sustainability level and the innovator kind of startup level, figuring out ways to work together. I think looking at a graph like this and thinking about probably who's on this webinar right now, a lot of folks at larger or medium-sized corporations thinking, maybe thinking, this is climate tech, this is startups, cool to see trends, but I'm doing big stuff over here. Maybe I don't have a corporate venture capital arm, but Talia referenced this need, no surprise, this need for customers, right? And I would just say, as maybe as the listeners in these corporate roles look at a chart like this, asking the question, almost how do we outsource some of our innovation to partner with, right? These startups, which look, you can manage your risk in the contract while also giving these startups the street cred or the contracted revenue, however small they need, to get that next bucket of capital from Talia or others to get to a point where they're climbing that ladder towards mainstream.
Yeah, totally. Well, okay, so there's a couple of things I want to get into, like digging into pieces of this. The first one, I mean, we're, who are we at Sustain.Life? We are an ESG SaaS platform, but we have deep expertise in carbon accounting. And so I think we can't have this conversation without thinking about, for the businesses, for the corporates on the line, this huge proliferation for the need to understand your carbon footprint and your carbon profile and how that integrates with your core business operation and your ultimate business strategy. I've put up a couple headlines here like this. These are all from 2022. This is happening. Carbon accounting is not going anywhere. We're seeing across, again, those regulations and investor-driven disclosures, we are seeing integrated reporting really come into the mainstream, regulated in Europe, almost there in the United States with this proposed rule, right? But wanting companies to, rather than have your financial report, which, is what the investment community is going to look at, and that's where you're putting your ultimate, source of truth for your financial performance, to convey your value, your enterprise value as a business. We're seeing that integrate now with climate data and emissions data to make sure that businesses understand, here's the totality of my operation. Here is the totality of the impact of my operation from the carbon side. Here's how we look at this. Here's how we manage it. And we do it in the same way that we would, and to the same rigor that we would financial data. And I think, we spend a lot of time peeling back the different regulations and commenting on the regulations, but I just want to step back for a second. It is such a huge deal that we even have these regulations across the globe that are requiring emissions disclosure, alongside these financial filings and in this kind of, consistent and comparable way. That is incredible that we are even at that place. And so obviously what's core to that is carbon accounting. And whenever we talk at Sustain.Life, we talk about kind of the different drivers that we've seen really pushing disclosure and understanding your carbon footprint. And we've actually always had regulation at the bottom. And so I think that that's just such a testament to how much regulation has come in 22. It's a testament to just the sheer force and pressure that we are seeing across the business community to understand their emissions impact. We've always kind of ranked these as number one, a supply chain network effect, because you do have these large corporations that have such ambitious, incredible net zero goals. And, they have deep expertise in this place. These are the companies that have had, sustainability teams for decades, frankly. And so they're really driving a lot of leadership where if you want to sell into one of these huge businesses, they're asking you, hey, what are your emissions? What are you doing in this space? Because Scope 3, right? We all understand that what's happening in your operation is part of my larger value chain and supply chain. And we, as stewards of our own capital and the businesses and the causes that we support, this is what we expect of those that we do business with. And just that sheer market force of supply chain is so powerful and so incredible. And I think what we're seeing now is, we've always had that, and then investor pressure of needing to understand these different ESG related risks and opportunities and climate and emissions. And now that you have regulation kind of bringing up the bottom to say okay, even if you hadn't gotten there as a business, if you weren't a supplier to one of those, large businesses and companies, even if your specific investors weren't asking for this, it really, to me, just shows a raising of the bottom of the bar so that we collectively can move on, with such strong force in that direction.
And what's amazing about that, Alyssa, is how it has been done up until now. I mean, up until very, very recently, we see kind of manual surveys being provided to suppliers. Nothing really was digitized up until very, very recently. And it's if you think about how do you scale, something like that? How does a end customer understand kind of its entire value chain and supply chain? It has to get digitized. How do corporates start understanding their data? They know they have the data. do they know how to make sense of the data? Most of it is unstructured anyway.
Yep.
And so you're having this huge push to like start, okay, we need these tools to start making sense of the data so that we as a corporate can understand what is going on and, internally. I mean, I just had a discussion with Amazon's head of sustainability, but they are trying to figure out of all of the facilities and buildings they own, they don't even have that data. There is so much information out there that the companies are trying to have to make sense of that they don't have the tools yet. And so there's just going to be this this race to digitize,
Yeah.
because essentially they don't have a choice.
Yeah.
Alyssa, all I can say is I wish that Sustain.Life existed about 12 years ago. I recall I was coming back from a weekend trip with the family, then just my wife and one of our children. And I get a text from my colleague saying, hey, did you get the message from the CEO? He wants a full carbon kind of footprint of our entire private equity portfolio by tomorrow when the investors come to town. And I said, what?
What?
Anyway, 3 o'clock in the
10
morning.
years ago? There
12.
was that there.
12 years ago. Yeah. 3 o'clock in the morning. The Excel spreadsheets were completed. They were quite wrong,
Yeah.
but much easier with Sustain.Life, needless to say.
I actually think it's incredible. And we talk about this all the time at the company, but you have like, I don't know, you could call it like a privilege or a fortune, but all of these companies that are earlier in their, sustainability and climate and ESG journeys, but yet have more sophisticated needs and expectations than, had they just been starting out doing this stuff 10 years ago, because I think we are seeing the digital transformation of this. We are seeing just technologies like Sustain.Life, but that the expectations are like, no, you don't have to do this in a spreadsheet. This is not so horrible. Like, we understand this. We know, like being able to connect those dots, whether it's to your supply chain or within your operations and helping you, set targets and relative to your sector, all of that stuff. Like, there are these incredible tools out there to help guide users so that you're not doing this in the dark. And so it's just amazing to me that you can have a company that's just starting out, but they get to start out in a much more mature place than, if you were trying to scrap all this together a decade ago and really just try to figure it out on your own.
Just like my students, companies today are so lucky. So much easier today. Yeah.
Totally.
And most companies don't have a sustainability team, right? I mean, we're talking about kind of the ones that have the privilege to do that. The Microsofts here you mentioned, and all these, the blue chip companies. But essentially, most companies don't have they don't have the luxury of affording an entire kind of in-house team, right? And so that's kind of where this opportunity is even that much greater, right? Because it's ultimately, whose job is it? See if they don't have the tools to get this data, right? And so it's going to be essential for them to start, onboarding these digital tools.
Yep, absolutely. I mean, when we talk about the reduction side of emissions and what corporations can do, within their own operations, I think so much of what we're seeing is just that first piece in that Amazon example of just like wrapping your arms around your own operation and getting that baseline measurement. Like, that is tricky, to do that in a consistent, reliant, dependable, repeatable way. This isn't just like, okay, we're going to measure it one time and we've got it. It's like, no, this is recurring information. We need to understand on a year by year, quarter by quarter basis, what's going on in these places. Because again, it is so tied to strategy. Are we going to pursue, retrofits of equipment, and we want to understand what's going to be the ROI in saving that energy and saving that carbon against our initial capital outlay? Are we going to, decarbonize and electrify fleets or electrify buildings? What are we actually doing in our operations? Let alone, how are we engaging in our supply chain and what's our expectation, with our top 25% of suppliers or, wherever businesses choose to start. I just think we're seeing so much activity around getting your arms around that initial baseline and using that data to make informed decision about your business.
And then prioritizing, right? Because there is so much to do. The larger the organization, the more work around that.
Yep. And so I do want to talk about the other side of this pie. And I love this conversation. I think it's so important. Like, we are at Sustain.Life, we are so passionate. We are deeply committed about operational reductions and bringing those numbers down. And that is such a huge part of getting to our 1.5 degree warming scenario. Like, that is clearly, for those on the line, that's the whole top part of this graph. Like, we need to deeply, deeply, deeply reduce the amount of greenhouse gases that we emit from our operations. But even if we do that, even if we do the best we can and we, follow the trends of the best case in the studies, we've emitted so much carbon and greenhouse gases into the atmosphere that we are going to have to remove some of what's there in addition to these deep reductions in order to hit net zero. And I think that that's such a critical piece of the conversation, and that, understanding the different benefits and value and like how do these pieces fit together of reductions versus carbon removal and then offsets, and what that all looks like and coming together. So we talk about this, and Chris, I know you have such a keen eye on some of these really cool technologies, and I just want to talk a little bit about what did we see in 2022, on the removal side. And you mentioned some of them, but some of the really cool, companies, we've got nature-based solutions, we've got technology-based solutions. And I always call this like the sexy side of carbon because, it's really cool. Like this is the sci-fi. And so, and then I had mentioned on the front end of this webinar, like just last night, the Biden administration announced $3.7 billion to kind of government dollars to incentivize further research and development of this technology. But like, what are some of the barriers? What does this landscape look like right now with, carbon capture and carbon removal?
Well, I guess the first thing I would say is, call them offsets or removals. It's going to be a portfolio play. It's not going to be one solution that kind of meets all corporates' needs to address what they can't reduce to hard to abate sectors and so forth. So look, we need nature-based, we need kind of high-tech, high-permanent solutions as well. I will say as a fun little aside, I co-launched a startup. I'm sorry, co-launched, it's so used to saying that. I co-launched a nonprofit called TerraSet, TerraSet, with Alex Rade, GP at Moxie Ventures and former head of engineering at Twitter, to bring more philanthropic capital into CDR. Yeah, and specifically around AMCs, right? So these advanced market commitments, basically like Frontier Fund, but using philanthropic capital, not corporate capital. And a little bit to my comment earlier, when corporates can make a commitment like this to a startup to provide some sort of, whatever, maybe it's 5 or maybe it's 10-year contracted revenue, that startup can now probably get cheaper cost of capital. Maybe project finance, eventually, probably still through the corporate early on. Maybe it's more capital versus cheaper capital. I think some of the stats we've seen in kind of developing the thesis or need for TerraSet, to date, something like 10,000 tons of super high permanent GHG carbon has been sucked out of the sky. So cool, maybe, but we need 165 billion tons sucked out by 2050. So super early days. So that's daunting. I think the other pushback is price, right? Where if you look at the cost for these high permanent CDRs, $500, $1,000, $2,000 a ton, you may ask, well, why in the world would any corporate ever buy those when they can get, good nature-based at far cheaper? Well, one answer is look at Shopify's recent guide to purchasing CDRs, but the other is that we hope what will happen with CDR is what has happened with solar and wind. 30, 40 years ago, it was super expensive. It was meant for kind of back to the land or off-grid solutions. And now, as we all know, one of, if not the cheapest forms of all power on the grid. So look, I think the goal is let's get from, call it $1,000 a ton to maybe $100 a ton. Then the demand for all these things is going to increase. The price is going to increase in the decades to come. So I don't know, I think it's daunting. It's also exciting thinking about the hundreds of CDR companies that have launched, groups like Air Miners, this Slack plus, I guess, maybe accelerator program to help CDR startups to mature and grow to a point where maybe Italy or others could fund them once they mature. That's the optimism part, I think.
Yeah, super cool. And so you mentioned the Frontier Fund. Just for those who don't know, do you want to talk a little bit about what the Frontier Fund is? That was actually one of the big stories, I think, also from 2022, and just looking at how large companies, frankly, came together to fund the R&D of carbon capture technologies. And so, yeah, go ahead.
Yeah, I'm sure I'll miss some of the names, but it's names we would all expect, right? The Meta, the Alphabet, Shopify, Stripe, McKinsey. I think those are the top 5.
It's Meta, and then that rounds it out. You crushed it.
Yeah. So not $925 million committed over 7 years in the form of advanced market commitments. So telling a CDR startup, hey, we'll buy your CDR when it's produced this amount over the next, it depends on the contract, but 5 to 7 years, let's say.
Mhm.
It's amazing, right? It's also a drop in the bucket, which is again depressing slash exciting slash a challenge, right? For who's next to fund AMC. This is really about. It's not about what do I pay per ton to reduce the travel for our company. It's about how do I stimulate a brand new industry that if we don't have it, we're not going to achieve the goals laid out by the IPCC.
Yep. Yep, totally. And so I know we're running out of time here, and I do want to leave some time for questions. I can't not talk just for a second because you did say I think talking about the green energy transition and what that looks like. And we just actually released a quick little podcast last week on the new IEA report that just talks about it's their annual report on renewable and on renewable electricity. And it basically said that in the next 5 years, renewables will become the predominant source of electricity, overtaking coal. Period. Drop mic. Amazing. Like that is huge. And that increase in the next 5 years is as much renewable capacity as we've put onto the grid in the past 20 years. And so again, like just thinking about these forces, the cost of renewable has dropped so precipitously. And I don't know what the lag is, a decade, 2 decades, 3 decades of when we see kind of the same mechanism for carbon capture and CDR, but it's like we see the patterns emerging, right? Like this has happened with renewables. This is an observable, real thing. And we see the different kinds of incentives and kind of economic structures that have, led to that. And I'm just so excited to continue to follow that for CDR because again, like while we're deeply committed, like I think as a business, you have to focus on the operational change. It is really cool to think about all of just the research and development in the CDR space and the removal space. So before we kick it off to questions, I do want to go looking ahead to 2023 predictions. We've talked about a lot of stuff here. We've talked about regulation. We talked about kind of the unification and the clarity and the alphabet soup of ESG, market trends, technology. What can we tell our viewers? What do we see on the horizon for 2023 and beyond? I won't just cap it, to a year because I think there's so much, but what do we think is going to be happening across all of these spaces that we should really look out for? And I'll say, be bold here, right? Like let's not be shy. We can always be wrong. That's fine. There's just so much happening in this space. I'll go out on my limb and say bold prediction 2023. I'm just going to stick it close to my heart with this proposed SEC rule. I just really, really hope that it happens. I think it will happen. I do think it will happen in some way, shape, and form. It might not be in the current one that we saw proposed, but I do think what can't be stopped is, while maybe some fall out from the very bottom, the mass cohort, there is so much clear value and opportunity and impact of understanding your carbon impact. I don't think that's going anywhere. I think that it is such a clear indicator of being a leading company and understanding your strategy and just demonstrating like you are a leader in your space and like who doesn't want to be competitive, right, in their space. And so I think no matter where you are, whether you're, blue chip, they're obviously already doing this, but even trickling down to mid-market and small to medium-sized enterprise, this is part of how you drive up your customer and consumer demand. Like this is a clear topic that consumers are interested in, and value. And I think that's demonstrated. So that's my bold prediction.
And wouldn't that be beautiful, Alyssa? Talia, what do you think?
I think if I were to focus, I mean, as a fund, we look at really like heavy industries, right? We look at construction and built environment and heavy industry. But I would shift my focus to finance. What I would love to see and what I'm hoping to see is a shift in consumer demand, investor demand, because once the pressure is placed on pension funds, asset managers, hedge funds, by the investors, by the people who have the money to own certain assets, right? And that then trickles down into the financial institutions, because what we're seeing kind of back and forths around that, pension fund claiming that they're, ESG compliant, non-ESG compliant. And then that would then trickle down to the actual corporates, whose shares these investors own. I would love to see a lot of force coming from investors demanding a lot more transparency and visibility into what, these asset managers are holding.
Yeah, I would. I'm going to say something which sounds like a Debbie Downer, but hang tight. I'm just going to say that a lot of the exciting startups we've heard about aren't going to make it, and that's fine. That's how this stuff works. That if you raised a lot of money, whatever, 12, 18 months ago, and you need to raise a round in a tough environment for whatever 12 or 18 months, maybe you don't get there. But look, this is a portfolio play, right? And this is, look, maybe we're in the first inning, right, of climate affecting every single sector of the economy. That same source, CTBC, talks about $40 billion of dry powder. I think a lot of that sat waiting for the knife to fall.
Mm-hmm.
Look, I think lots more capital deployment coming in 2023.
Love it. Love to hear it. All right. I want to kick it over to questions just in our final few minutes here. We'll do our best to get to all of them. So one of them that came in, do you have any advice for a new sustainability professional trying to navigate the field and create the path of sustainability? And I'm going to tag that with another one that came in that was pretty close. So also think of a large amount of people are struggling to transition into climate and sustainability roles. There seems to be a high barrier of entry and a lack of training and opportunities and support from companies, creating a bottleneck effect. What can we say to these folks?
I'll start and say, I believe the organization is called Climate Draft. And I think it's specifically designed to help folks kind of be onboarded to the climate tech sector. Another is TerraDo, TERRA.do, which is kind of cohort-based education online around both climate science, policy, market stuff, and related, but maybe to join a peer group. I mean, this is maybe the hammer looking for a nail, but whatever peer group you form, is it a formal peer group? Is it just you find other, CSO types? Don't learn on your own, essentially, is the goal. Celebrate wins, share best practices, commiserate losses. Yeah, it's a marathon, not a sprint.
Totally.
I think if I were to say, I think right now there is more supply than demand, and not because it's not an important topic. I think that a lot of companies are going to be kind of coming together over the next year or two, putting together their sustainability agenda. A lot of companies are kind of behind the curve. So I think that there are going to be many more opportunities to make that shift as time goes. But I feel like we're just in the diaper phase right now. A lot of companies are just trying to figure out kind of what kind of teams they want to build around that. So I would definitely say join as many kind of, as Chris said, peer groups, forums, try to get kind of accessibility to, job boards. I think these opportunities are going to appear, tap into the startup scene in your local ecosystem, because there's going to be tons of founders that are going to be, launching new companies. And so it's just an issue of time and patience, but I think it will come.
All right. So continuing on that thread, what should corporate sustainability professionals be looking to prioritize as we head into 2023? It's a nice tactical one for us.
I mean, I would go back to the core of this conversation around regulation. I was part of the automotive industry when the sustainability team was actually put into place, and the priorities were really based on, what specific parameters are going to be put in place by regulation that are going to affect the company, based, what are the near-term risks and what are the long-term risks, and where should we be placing kind of our focus? It's really impossible to shift to the entire organization simultaneously. Obviously, prioritizations are going to have to be put in place, right? Do you focus on your production floor, your supply chain, your EV fleet, whatever? I think ultimately, really, it's just about understanding regulation and what is going to be expected of the company in the coming years.
Yeah, and I'm going to tack on to that because, there's likely a bunch of companies that are not quite regulated, probably falling below, the size threshold of various regulations. But continuing on the same thing, I would just say, think about this strategically for your business. Sometimes regulation's great. It provides a clear thing that you have to do and a way that you have to do it. But if you're not quite covered by that, just, look to that, I think, as a model. And all these regulations, remember, are based on standards. So you look to these standards and just understand, okay, here's the goal, here's the end. This is where we're going to wind up. Let's start to think about these things, work across your teams, really integrate this, weave it into the fabric of your business, because it can be an uphill battle. It can be a bit of a slow and steady. And so the more that you can kind of socialize and familiarize, into your core business and really start relying on these things to dictate and make strategic decisions, I think that's setting you up for success as the sustainability practitioner, and also your business up for success in terms of strategic resilience towards future conditions, whether it's regulatory or otherwise. So I think that caps it off. We do have a couple more questions, but we'll do our best to follow up afterwards. Want to be respectful of everyone's time as we reach the top of the hour. Holly, Chris, I want to thank you so much for sharing your insight on this webinar. Thank you to all of the viewers for joining us today. It was a pleasure to have you, and we look forward to seeing you in the new year in 2023.
You're here. Happy holidays.
Thanks, everyone. Happy holidays.
All right, take care, all.